So for those of you who don't know, Starling Bank is one of the leading challenger banks here in the UK. We like to refer to ourselves as a tech startup with a banking license. And we were founded in 2014 with this premise. So until now, the type of innovation that people have seen from everywhere else in their lives hasn't been brought into banking and into financial services. So what we saw really was that up until 2008, banks were reasonably good at keeping pace with technological change. But then all of a sudden we had the financial crisis, and then there was all these new rules and regulations and these fines being levied, and innovation just dropped to the bottom of the priority list. And yet at the same time, if you look at 2008, that's when some of the most transformative innovations came to market. So the iPhone launched, and then Uber and WhatsApp and Airbnb. And so this gap started to emerge between what consumers were expecting and what banks were delivering, particularly in terms of user experience. And so we were founded, and we decided to build a retail current account delivered only via mobile. So we're 100% cloud-based. And we also decided that the back-end technology would be a huge differentiator for us. So we're often referred to as a full stack bank, which means that basically we built the back-end technology as well as the front end. So what that meant is we decided that the back-end technology wasn't a commodity. And there's a number of challengers in this space who what they'll do is they'll build the bank on top of someone like Wirecard or Bancorp, and then they'll innovate in terms of the app and give a new user experience, like new spending insights. You might think of companies like Monzo or Revolut who have a prepaid card and provide some really good tools to understand your funding, but they weren't a full current account. So we decided to take a different approach, build a full stack bank, build the back end, so that we could bring in types of innovation that we saw as hugely appealing for what we wanted to offer, and then get the full banking license. So that's how we enabled FSCS protection, which means as a fully licensed bank, you insure your customers' deposits up to £85,000. And then enabling the MasterCard debit card, things like direct debits and faster payments, launching something called savings goals, which is how you can just simply parse out funds from your current account. And then starting to really focus on the user experience. So when you talk to a product manager at a bank, they'll probably talk to you about interest rates. And while it's interesting, if you talk to a product manager at a consumer tech company, they're going to talk to you about things like, how do you understand your customers' problems, their pain points, and solve those in delightful ways? How do you collect and present data? So when we brought that mindset with a lens to banking, it was things like the pain point was just setting up an account. So it could take 6 to 8 weeks. You had to make an appointment at a branch location. When you went into the branch location, you had to fill out documents. You had to bring in proof of your identity around utility bills and all this stuff. And it was a painful process. So we made that so you could do it in less than 5 minutes, all from your phone. So you fill in a few pieces of information. You take a picture of your passport ID, record a short video of yourself, and you're done. So making things that were previously very long, very time-consuming or paper-based, and making them really easy and frictionless for customers to do. And then the next few things I'll talk about and show some examples of were around spending insights, giving people a better view of their data so they can understand their money better, giving them more card control, which is just security to say, like, I only want my card to be available for in-person payments and not for ATM or online, but being able to set those controls yourself. And then our open APIs and developer platform, which I'll spend a bit of time talking about at the end. So for those of you who haven't seen it before, this is what it looks like. So from the far left, this page is called the Pulse. It's kind of small, so I hope you can see it okay. But that is what gives you an overview of your daily spending. The second one is the transaction feed. Another one of the pain points we identified is currently within any of the traditional banks today, when you make a transaction, you purchase something, you don't get the notification of that until about 2 to 3 days later. So we made it so that it's real time. It's updated literally as you spend. The moment you check out, you'll normally get it actually notified in your app before the till even says approved. And then additionally to that, we also give some additional insights and layer that over a Google map, which I'll show you an image of in a moment. The third is the card control. So that's things like the screen you see there where it says locked. Say you lose your card, but you're not sure if you left it at the bar or it's under the couch. You can simply go into the app and click locked. If you find it, you just click that again, and it's unlocked, and you can use it again, or you can request a new card if you can't find it. The fourth is the overdraft. So we offer an overdraft, but we let users also just toggle it to whatever amount that they're wanting to do, up to their fully approved amount. That way they have more control and flexibility over what that is. So if they want it, they can turn it on. If they don't want it, they can just reduce it down to 0. And the last one is called the current account switch service. It's actually been mandated by the government, but we wanted to make it really easy for our customers to use. And what it is that say you're using Starling and you want to use it instead of whatever you're currently using, Barclays or Lloyds or HSBC, and you want to switch from that account, then you just enter in your Barclays account number and sort code, and we'll move over all of your funds, all of your direct debits, and close the old account for you. That way you don't have to do anything at all. Or you can do a partial switch and just move over some of those direct debits if you want to do that as well. But it's looking at how you can basically make it easier for customers to switch should they choose to do so. And this is the timeline for it. So building a bank, the thing that takes the most time isn't actually building the backend technology, it's getting the banking license. So the first 2 years, we did spend it out building the bank, but more importantly, probably was going through the regulatory process. So you have to also raise a lot of money to do that. So since we're insuring all of the customer deposits, it means that you have to raise a lot of capital in order for the government to give you the banking license. So for us, we raised $70 million in our first round last year. And then when we received our banking license subsequently after that, and that's what enabled us to start doing our alpha and beta testing. So that's when we started testing MasterCard debit card, which you can see in October 2016, testing the consumer app in November, processing direct debits. And then also as a fully licensed bank, you get certain privileges that only licensed banks get, one of which is connecting directly into payment schemes. Anyone else, any fintech, any European bank can't do that. They can't connect into faster payments or backs or any of these services. They have to go through an intermediary, which is often a bit expensive as well. So we had the ability to do that, which was really good. So we kicked that off in January of this year. And then we also launched our API and developer platform. And then since then have been doing things like enabling Apple Pay, Android Pay, spending insights, savings goals, and those types of features. So to put this in kind of a context for examples of some of the pain points we're trying to solve. So yesterday, if you were to think of understanding your bank account, understanding what you'd been spending, you would think of this monthly bank statement that you would get in a paper envelope in the mail once a month. Today, we've made it so that you get notifications in real time as you spend on, if you have a smartwatch, or it'll go directly to your phone. And what's a bit hard to see here on the right is the notification, where it shows you the merchant, in this case Pret, how much you spent, the time that you spent it at. What's in the background is a Google map, so you could pull down that view so you could see a full Google map for the location of the purchase. And then some insights at the bottom here to tell you how much you've spent there so far this month versus this year. And then here is the insights. So on one side, you see merchants, and basically it's breaking down how much you've spent TFL versus Pret versus all of these different merchants. If you toggle to categories, it would break that down into shopping, petrol, and so on and so forth. Right now, this is the building blocks for where we want to go with insights, but it ladders up to a much bigger vision we have for this, into giving people tools for understanding how they're spending their money, and then in the future do predictive things like understanding, based off of what I'm spending today, where will this mean I am at the end of the week, end of the month, end of the year, 60 years, so on and so forth. The categories can also be laddered up to what's called an FCA compliant affordability assessment. It's used to basically pre-approve you for lines of credit. In the future, we envision this means that in the future, if you need a loan or a mortgage, instead of having to fill out loads of documents, we can just pre-approve you based off the fact that we've already categorized your spending. So if you authorize us, we can just share that data to the lender for you, and then you don't have to fill out all of that information. It'll just be pre-approved. Another example is traveling with a debit card. So previously, if you were to go abroad and want to use your card, then you would have to let your bank know ahead of time, or else they wouldn't know if it was you or if it was fraudulent, and so they would probably put a freeze on your card, which is really inconvenient when they're in the middle of traveling. So for us, what we do is we make it so that we can authentically recognize it's you that's traveling, and then we can also start to do things like this, which is just to say like, hey, welcome to Germany, the exchange rate from the pound is X. So starting to help customers so that they don't have to go through these points of friction throughout just trying to use their card on a daily basis like they normally do. And then next, we are a bank with APIs. So APIs are the plug and cable of technology. It's how two different systems can talk to each other. You all use APIs probably daily, but might not know it. If you've ever logged into another app with your Facebook login or your Gmail login, that uses an API. If you've seen when Uber first came out, like the map in Uber was driven by the Google Maps API. It's just how two different apps can share functionality. And APIs have fundamentally changed the way that software has been created and brought to market in tech, but that hasn't yet bled into banking. And what it means is basically that developers realized that a lot of the functionality that they were building into apps was redundant to what someone else had already been toiling over. And so rather than reinventing the wheel, they could strategically integrate in other pieces of functionality via these APIs. For us as a bank, this is really nice because we're focusing on building the retail current account, but we don't also want to be the best mortgage and the best insurance and the best lending provider and all these other different financial products that typically would make up the full horizontal feature set of retail banking products. So what we're doing instead is we're creating a marketplace, which is how we integrate fintechs from across the market into Starling to give our customers choice and transparency around their options and help them to securely use those should they choose to do so. Typically, when you thought of a marketplace, though, you'd probably think of something like this, somewhere like this or Borough Market. And it's this place where it's just a physical space where a number of different vendors can pay a fee to sell their goods there. And customers love it because they have a variety of options. And the vendors love it because they know predictably there will be people there to sell their goods. But this type of marketplace wasn't previously possible in tech. So what you'd have is one company would be serving all of these different goods. It'd be one company that was very heavy, very vertically integrated, performing lots of different functions. The way the APIs have changed it is such that now you can have one company that strategically integrates in other pieces of functionality, such that they don't have to provide every offering. To put this in the context of financial services, this is a traditional bank account, so this is Wells Fargo. And it's showing all of the different products they offer. So you see banking, loans and credit, insurance, investing, retirement, wealth management, so on. This slide is shown at conferences all over the world, and it's called the unbundling of banking or disintermediation of banking slide. Sometimes the platformification of banking. And what it is, it's showing that for each of these traditional offerings from a bank, you now have fintechs competing on each of them. And what's happening is these fintechs start and they'll have a vision on how to solve one thing and solve it exceptionally well. So an example of that from the UK is TransferWise. So you might be familiar with them from the foreign exchange space. So what they identified is that banks are not transparent in their pricing. Particularly with foreign exchange, they'll inflate the exchange rate and then they add a fee on top of that. And they aren't transparent or fair with how they're charging customers for it. So they came out with this flat 0.5% charge that they would have for foreign exchange, and they just always give the mid-market exchange rate. And so starting to compete, though, on very specific products. So for us, our view is that there's all of these different fintechs who are looking to solve each of these different areas exceptionally well. So rather than trying to compete with all of the fintechs and all of the traditional institutions on all of these things, what we do instead is have the marketplace where we integrate in each of these options. So that way, if you're already using one and you simply want to connect it to Starling and view your ISA from Wealthify within Starling, then you can do that. Or if you want to take out a travel insurance and you just want something to easily connect with via your Starling app, then you can do that as well. But it's being able to have choice in a competitive marketplace all from within your Starling app. So what it looks like today, so we're just now at the beginning of launching this, and this just came out. So we have the marketplace in the app. As you can see in the middle, there's different categories of it. So loyalty and receipts is the first one we came out with. This is actually because it's a bit of a new space for some of the entrants in the market, but what they're looking to solve is the fact that you have all these different loyalty cards right now. So you might have a Tesco Club card and a Sainsbury's Nectar card and a Cafe Nero card. But instead of having to keep track of all those, just as you spend on your Starling card, it just automatically accumulates as you spend. It recognizes that now you've paid at whatever merchant, and it'll automatically accumulate the points. So we have, if you've heard of Flux, so they're one of them, and then Yo-Yo Wallet is another. But instead of having to use any separate app, you can do that all from within your Starling account. And it just automatically happens as you spend on your card. But the idea is here is that the type of innovation that you can enable when you build out a set of APIs is more than you can predict. A community of developers can inevitably develop and innovate faster than any one single company alone. And so it was one of the areas we didn't necessarily predict because we had been thinking in terms of financial services products. But at the end of the day, what we're seeing is that there's a lot of cool tech companies who aren't traditional financial services products who are building on the API and creating cool integrations with it. So it's a fundamentally different experience. It's for a smartphone generation. It's only via mobile. We don't have any branch locations. You can open an account in minutes from your phone. We have contactless cards and digital wallets like Apple Pay, Android Pay, Fitbit Pay even. Easy ways to control, manage, and spend your money, and leader business models. Oftentimes when I give this talk, one of the main questions people like to ask is, okay, that's great. So you don't have any fees and you have this really low interest rate on your overdraft. And it's a free account, but how do you actually make money? And the way that is, as a bank, there's three main ways for us. So one is we take in deposits, and we can hold those because we're a fully licensed bank, and then we can lend it out. It's the overdraft. And you make difference on what's called the net interest income or the net interest margin. So that's one way. Because we don't have any physical branch locations, and we don't have 100,000 employees, we have like 150. That means that all of a sudden that gets us to profitability. But additionally, because we're directly connected to payment schemes, because we're a fully licensed bank, that means that now when other fintechs or other European banks need access to faster payments, rather than going through one of the traditional institutions who will take 12 months to onboard them and charge them an exorbitant amount, we can do it in 12 weeks and at a fraction of the cost because we have new technology, so it just costs us a lot less to process that for them. So that's another part of our business model, which is just B2B. And then the other one will be our marketplace. So the way that we're setting it up is we want to have standard pricing for our partners. So if you want to offer product in the marketplace, to just pay a standard fee, or per category a standard fee whenever a new product is taken out. And as we build that out, that will build up as a revenue stream as well over the long term. But that's all I wanted to share with you today. But if you have any particular questions, happy to answer those as well.